Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions, where we use the Deferred Sales Trust to help you escape feeling trapped by capital gains tax on the sale of a business, high-end primary home, or investment real estate so you can create and preserve more wealth. In this video, we are covering how and where are the funds invested once the Deferred Sales Trust closes. So their funds are invested based upon your individual risk tolerance. What does that mean? Well, you fill out a 2-page questionnaire and you answer some initial questions about your experience with investing, your experience with stocks, bonds, mutual funds, alternative investments, and also your level of risk, depending, basically stating what would happen if the market shifted, what would happen if you lost some of the funds, what is your tolerance for loss and or tolerance for gain. And based upon that score, an allocation is presented. And this allocation has to have your approval. And this becomes the constitution for how and where the funds are invested. And the funds only ever move with your signature, and the allocation only ever changes with your approval and your signature. So most of our clients will put it into a diversified portfolio of liquid investments, especially today in this highly appreciated marketplace. And they'll put it in stocks, bonds, and mutual funds. And they'll live off a passive income stream. It's generally somewhere around 6 to 6.5%, while the note's earning about 8%. And so after fees, they're about 6.5%. And what's unique about this is they're just living off the interest payments, and they're going to pay ordinary income tax on that interest payment, but the principal is going to remain intact. And that's where most of our clients land. Now, some of our clients will actually delay some of those payments and just let it compound into a future date, which makes sense for them to take optimal distributions given their tax situation. So that's very important that the funds are stocks, bonds, mutual funds, liquid, and also safe. But also you can put it into investment real estate, which is actually my favorite. My background is investment real estate broker with a company called Marcus & Millichap years ago. Now I have my own company as well. And we help people buy and sell investment real estate. But what we found is people were looking for an alternative to a 1031 exchange. They didn't want to overpay for property and didn't want to remain in debt and wanted to be retired from the toilets, the trash, and the liability. So one of the unique parts about the Deferred Sales Trust is not only can it go to stocks, bonds, and mutual funds, but it can also go back into investment real estate at any time, meaning tomorrow, day 181, or 6 months or a year from now. And when you do that, you can put it into partnership deals. You can put it into commercial real estate operator deals or syndications. You can do your own deal. It's very, very flexible. A little caveat, about 80% of the funds can be used for that. The other 20% will need to stay in the stocks, bonds, and mutual funds as a reserve account. So there's a little rule there we'll need to follow. But those are essentially where and how the funds can be invested, and also a little bit about how you can receive the funds and have flexibility there. Hey, we want to teach you more and more about this and see if you might be a good fit. So we provided this link to the right. It's a link to an application that'll answer initial questions. And if you fill that out, we can determine if a one-on-one consultation call is warranted. And based upon that, we can walk through, no cost to you, the Deferred Sales Trust for your scenario. So go ahead and either fill that application to the right or below in the show notes, and let's connect here soon. Go ahead and do that now. Thanks so much.